Welcome to Better Returns, where you will learn how to escape the volatility of the stock market by passively investing in real estate like a pro. 90% of millionaires earned and maintain their wealth by investing in real estate. We will share real-life examples from savvy investors so you can do the same. This show is for educational purposes only and should not be considered legal, tax, or investment advice. In college, he studied in the basement of his dorm, which was called the Tomb because it was so quiet there. Your host and my dad, Matt Hansen.
Welcome back to Better Returns, where we teach you how to invest like a pro. My special guest today is Roderick Capelo. He's a pediatric orthopedic surgeon and a seasoned multifamily investor and just an all-around great guy. He's also a great dancer. Are you a professional or just semi?
Semi-pro, yeah.
Semi-pro.
I can make a living dancing.
He's working on it, though. In the last few years, he and his partners have acquired over 2,600 units of multifamily units across 5 states. He's a general partner in about 1,100 units of those. So through his company, Fortis Equity Group, he's now connecting physician colleagues, family and friends with safe, cash-flowing multifamily investments to help them achieve true financial freedom. Welcome to the show, Roderick.
Thank you so much for having me. I really appreciate it.
Well, I always like to start with your origin story. How did you discover real estate investing?
Well, hopefully this is a 2-hour podcast because the story's kind of long. No, I'm just kidding. So I'll try to give the abbreviated version. So, I graduated from my residency back in 2005 and, had no idea how to run a business. Nobody tells you that in medical school. Started a private practice, having no idea what I was doing with my former partner and I. But through some negotiating with hospitals, we were living high on the hog, as they say down here in Texas, and just really killing it. And I'm about to build almost $1 million home, and then had a meeting with the hospital CEO one morning where they decided to give this call contracting agreement to another group, and that affected about 40 or 50% of my compensation. Wow. So my mortgage is about to double, my compensation is about to get cut in half. And not 1 hour later, one of my best friends calls me and says, "Hey, Rod, do you look at ways of making money outside your regular job? What does that sound like to you?" Yes, network marketing. So like every good doctor should, I got involved with network marketing. And every good network marketing company, which this was, if they see people who have some promise, they're going to introduce you to personal development. So I started reading Jim Rohn, John Maxwell, all these great authors. And a few months later, one of my good friends and my mentor in this company said, "Would you like to go to the home of Jim Rohn's business partner for 20 years for a mastermind meeting?" Wow. And I had no idea what a mastermind meeting was, but I went. And I joined this mastermind group, which is a bunch of phenomenal people, led by my friend Kyle Wilson. And over time, I just sort of started changing the way I thought. I started thinking with more positivity and thinking, to only focus on what I can control. Many people in that group were real estate investors, attorneys, but I met 2 folks who are real estate investors, Robert Helms and also Mark Kinney, or I think both of them. And so I started going to these real estate conferences because I realized, hey, listen, all of my eggs were in this basket, and it's medicine. It's supposed to be a safe basket, isn't it? But no such luck. I realized things are not in my control. Only a certain amount is. And so I realized I needed to create an income stream outside of medicine. And so I started going to real estate meetings, and I didn't know. The first meeting I went to, I didn't know economic vacancy from cap rate. I had no idea what they were talking about. I really didn't. And I just kept going to meetings and meetings, and that's how you and I met. And and eventually I felt like I could kind of understand things. And I had the money in the bank, but I got cold feet and didn't invest. And then it happened a couple more times. And finally I said, listen, fortune favors those who take action. So I went and did an investment, and it went well. And did another investment as a passive investor, and it went well. And repeated that 5 or 6 more times over about a year period, and continued to go to these meetings and got into a coaching program. And I realized after a while, hey, these investments are going well. It's non-medical, so I don't have to worry about what the government regulations are or what insurance companies do. I can control where I put my money and who I do business with. So I realized I'm in this interesting situation where, I understand real estate now. I speak real estate, and I speak doctor, and not just doctor, any other individuals who make a good living, and especially who are in an industry that's beyond their control. So I felt like it was my obligation to create an avenue, a company where if people wanted to create a secondary passive income stream outside of their normal industry, they could do that.
Yeah, you covered a lot of great ground there. First off,
Sorry about that.
multiple streams of income and not
Mhm.
relying on your primary employer. Everybody thinks, oh, I'm working for this big company. My life is real secure. Your income source is one company. That company decides to change things, downsize, something happens with the economy. Maybe there's a pandemic, maybe there's a supply shortage. I love your thinking and you're helping other physicians and friends and family realize that, okay, you do need to have another stream of income. I think that's a really big message there you shared. And then the masterminds. I got started getting masterminds probably 6 or 7 years ago. And it's not really commonplace. You realize you and I are in one of the high price masterminds together, and we all are in multiple masterminds. I'm in 2 or 3, 4 at any given time. The general population doesn't realize they exist. And I think that's really great you touched upon is like, you don't know what you don't know. And if you stay in that same circle of friends, you're not going to grow. You're not going to see these opportunities that you and I see. I started in multifamily. Now we do all sorts of venture capital investing in super lucrative, kind of risky sometimes things, but real estate is our core. So I think that was a really good message there in terms of that. To talk about, but then you started passively investing first before you started to really get into the operations. So tell me a little bit about how your experience was as a passive investor when you first started out.
Well, when I first started out, I was still learning. And so, I took a leap of faith. In fact, it's kind of funny, Matt. I went back and I was looking at some stuff, some old files, and I saw the pro forma or the one pager I got from the very first investment I did. And there's not even enough information for me to invest now. Like I would ask for much more information, but I was like, oh, looks good. And I invested, so I just had no idea what I was doing. But I think one of the main things is through these mastermind groups, I got to know people beforehand. They were already my friends when I invested with them. So I did go on a leap of faith, right? And so it's nice to do business with people you know. Some people say, oh, don't do business with your friends. Well, I understand the mentality, but sometimes who better do business with than someone that you trust, right? And so at first I took a leap of faith because it was people that I trusted, and they went well. I was getting a quarterly distribution check. It was very easy because it was completely passive. It was at a time when real estate was doing really well, which there's some challenges now, but we'll get back there. And there's always ways to make money in any kind of economy. It was investment after investment seemed to be doing well. And so that's what I thought, I can't be the only person that wants to hear this information. And, doctors get pitched everything. In fact, the joke is when the doctors try to invest to get your money out because it's too late. And so, we're notoriously awful and we get pitched everything. And so I realized, hold on, my colleagues, I know what they're going through. And I know now I have this avenue, this group of people that I know well, that are my friends, that I invest with, that I trust because I know them. I know their kids. They know my kids. And I just felt like it was really my obligation to share that information. I felt like I was being selfish to not. Like, how could I have information that could be your key to freedom and I don't share it with you? That was just cognitive dissonance to me. So I was sort of compelled to do this. And it's not always easy, but it's always worth it, in my opinion.
Yeah, that's wonderful that you do, because if they're not aware of it, they don't know it's an option. Another one that I'm old retired executive. I had all my money in the stock market. People don't know you can get your money out of the stock market with a self-directed IRA and get it out of there and invest in a concrete asset like real estate. So I agree with you. I love the fact that you're spreading the word and helping people that don't know this is even an option to them.
Guess what I learned about self-directed IRAs in a mastermind.
There you go. Yeah, me too. It's like I didn't know about it until like 6 or 7 years ago. I would have done that long ago. So I guess, what do you look for? You mentioned, early on, looked at an investment, pro forma or whatever, and didn't really know what you were doing. What are the things, going back, what are the key things as a new passive investor you really should look for before you write a check? What are the kind of few things that you really look for now?
People. You're not investing in the business, you're investing in people. And so, it's who is the person you're investing in? One of my mentors says, don't do a good deal with a bad person or a bad deal with a good person. And so for me, it's foremost, and I'm blessed that I have enough deal flow coming in that I know the people. If I get a deal, an email in my inbox, and it may look like a good deal on paper, and I don't know the person, I just delete it. There's no reason for me to keep that. And so number one is people, and the qualities those people have to have is honesty, transparency, integrity. Now, to some people, those are a punchline to a joke. But to some of us, and I know you're the same way, this is words that we live by, right? I have young kids, I have 5, 10, and 12-year-old. And when I do business and I use those words, I'm demonstrating to my children. I'm trying to be the man that I want them to see and emulate and grow up to be. So that's what I look for in a partner is, do I know this person? And so someone listening to them, I said, well, I don't know anybody. Well, maybe go out and meet somebody. There's meetup groups all everywhere, doing with real estate investing in every major market. And you're not going to go put $100,000 down the first time you meet somebody. You're creating a relationship. It's farming. It's not hunting. It's get to know somebody. And so that's number one is I look for is people. Now for the deal itself, and this may sound weird, but in some ways the deal is fairly secondary because I know good people can turn a bad deal and make it decent. Bad people can take a good deal and run it to the ground, to be very honest with you. And so now, it needs to be in a good market with all the market fundamentals and all the nitty gritty details that you and I can geek out over. But at the end of the day, to me, it's really people. It really is. It's do you know, like, and trust the person you're doing business with? Are they going to operate with honesty, integrity, transparency, communication? To me, that's the key.
Right. I fully agree. You hit the nail on the head. It's really, you're investing in an individual. The asset is kind of secondary as long as the core, it's a good location, population growth and employment growth, the simple stuff. Any experiences, I like to ask, I've had a couple challenging experiences. If you had any as a passive investor?
Well, the first time I ever invested in real estate was as a single family investor. And I met a guy in my network marketing company that people vouched for him. He seemed like a good guy. I asked him for references, which he gave me, which in retrospect seems kind of dumb because no one's going to give you a bad reference. So here's a reference of the last guy I stole $50,000 from. No one's going to do that. So it was one of those situations where I put up the money and he did the rehab and we split the profits. And long story short, I lost about $40,000 in it. And so before I did any of this multifamily stuff. This is a single family home. And one of my friends, he has a saying, there's no lesson like a bought lesson. When you pay for that lesson, you have a tendency to remember it. And so that's why I realized, okay, I need to really know the people that I'm investing with. And so that was number one. And nothing in life is 100%. I wish you could tell you as a doctor that 100% of my patients do beautifully. They don't. It's like 99.99. No, I'm just kidding. Life is a bell curve, right? There's going to be some things that didn't turn out. I'm actually in a deal right now that is in a good market with good market fundamentals. But there's a series of things that happened, like a boiler went out that was only a year old. So when we looked at it and thought, oh, it's only a year old, great. Yeah. 2 boilers went out actually. The way the business was designed, you can't shut off the water to just one unit. So we had to shut off the water to the building. And then there was a hard freeze, a bunch of pipes burst. So it was just thing after thing happened that just made it so challenging to keep up the occupancy. And so now, did anybody do anything wrong? I felt like we did adequate due diligence. There was just a series of things that happened that nobody could see coming. Some of them acts of God, if you will, weather related, things like that. And so we're doing our best we can to preserve our investors' capital, and no one's going to lose any money, I don't believe. But it's not a fun situation, but it's a situation that sometimes happens, and that's one. I'm a passive or a general partner in probably about 12 or 13 deals, and that's one of them. That's the only one that's been anything more than very lucrative. And so, but I learned, they say that the worst part of any kind of mistake or the worst part of any downside is if you don't learn from it, right? And so,
yes.
Some of the things I've learned from it is, you can't control every variable. There is some risk in this business, a lot less risk than in the stock market, where some guy you don't know is drinking $500 bottles of wine on a Friday night, doesn't care about you. But nothing in life is 100%, and so that's why if you know, like, and trust the person you're dealing with, at least listen, they're not out to swindle me. That's a good person. Some things didn't go our way, but you feel comfortable with the decision you made still.
Mm-hmm. I like that you've acknowledged you're obviously a seasoned investor. You realize things are going to happen that are outside of the operators or the property management's control, and that's really great. And the most important thing is that the operators are communicating that to the investors so they know. I know we had somebody ran through a gate or whatever at one of our apartment complexes. It was pretty catastrophic. I mean, it was like $20,000 worth of damages. So we need to make sure our investors knew that, okay, nobody got hurt, and we're taking care of it. Insurance is going to cover. So that's really good that, you're working with individuals that are transparency. Like you said, in Wall Street, you invest in a stock, you have no idea what they're doing. You can't call them accountable for anything. You're just at the mercy of that company, that corporation. Here, you can call up Rod and say, hey, Rod, what's going on with my investment? And I think that's the power of this. And it's a physical asset too.
Exactly right.
Tell me a little bit more about, like, what are you looking for in a market? Now, okay, you're going to vet the individual. Now let's talk a little bit more about how you vet a deal.
Well, I mean, there are some, to me, my primary deal would be like 100 to 500 units, typically value add, but doesn't always have to be. And what that means to your listeners is apartment complexes are not really being run properly. They're a little older, maybe a little dilapidated, but there's an opportunity to come in and make them look nicer. I also think about it like a business. I'm not really buying real estate, I'm buying a business. And so the business is being run poorly. And so there's a lot of operational efficiencies you can clean up. It's really nice if it's in businesses in states that are easy to do business. We primarily, I think you do as well, like the Sun Belt, from Florida to Arizona up to the Carolinas, maybe up as far as Kansas and Arkansas up there. And really it needs to have some jobs for the type of people that are going to be in our complexes, which is generally blue collar folks. It really needs to have some job growth. So it's nice when there's large companies in the area, like the Federal Expresses of the world, the Amazons of the world, things like that. And then I also look at, what do the housing markets look like there? If the housing is really overpriced, there's going to be people that want apartments, right? And so there's a lot of different things you can look at. And now you can also get lost in the minutia. You can overanalyze anything. So at some point, you have to realize, okay, do I feel like I've looked at enough holes, look at enough variables that there's a reasonable expectation that I've covered most of my bases, and then if you have, then I feel comfortable pulling the trigger. But like I said, job growth, opportunities for jobs, now, if there's a bunch of white collar jobs and I have a C apartment complex, that's not really what I'm looking for. I'm looking for folks that are going to live in that complex, and vice versa. So that's mostly what I look for.
And here's a more larger question. Like, what percent? I'm interested to get your opinion. Like, what percent of you think somebody, the average person, let's say you're a high net worth individual, what percent of your portfolio do you feel should be in the stock market? It used to be the 60-40 split, 60% stocks, 40% bonds, which of course we know that isn't great nowadays. What's Rod's take on that? What do you think a good portfolio mix would be? Just curious.
0% stocks. I don't have anything in the stock market.
You're zero? You said you're zero in stocks?
I have no control over that. Now, can people make money in stocks? Yes, they can. Can people make money in crypto? Yes, they can. Am I going to spend the time necessary to learn that industry, to feel safe, to feel comfortable investing in it? I'm not. I just don't have that kind of time. So I'm not suggesting that you can't. I think the stock market is a bunch of Wall Street gamblers, personally. I don't trust those guys any further than I can throw them. I really don't. So when I have an opportunity to divest all of my rollover IRA money in a self-directed IRA of sorts called a QRP and invest in real estate, I did that. The only money I have in the stock market is my 401k from my medical practice. And I'm the administrator, and I called the company and said, I would like to make an amendment that you can do this, and that, borrow from it. And they said, oh, no, we can't do that, sir. I said, I'm the administrator. Of course we can. Anyway, it's the whole industry is amazing. It's like, it reminds me of the Hotel California. They think that you can check out, your money can check out, but it can't ever leave, right? It's always going to be there. They won't let you have it back. When I tried to divest some of my money from my rollover 401k from my previous financial planner, he said, well, we have a form for you to deposit with us, but we don't really have a form for you to take a premature withdrawal. I said, what? Think about what you just said. You have a form for me to give you money. You don't have a form for you to give me my own money back. Think about that. And so but that attitude is pervasive in the industry, which is why I don't really have any money in the stock market. I have friends that do not really day trading, but like week trading, over weeks and they're making multiple 5 figures a month. So I know it can be done. I think that industry is too risky for me personally. So I have very little in the stock market.
Right.
Which is a good thing because I'm an emotional guy. So when you see the stock market go up and down and there's blood in the streets, I'm like, oh, what's going on? Oh, that makes a difference to me.
You made a good point. The people that are making money on the stock market are those that are actively trading with the Fibonacci methods and all these things. Those are the people that are making money. You and I, you put your money, because we're not going to actively manage that portfolio. We're going to stick it there and let it sit there for years and years and years. And it doesn't grow like real estate historically. That's a challenge. There's
we can talk taxes.
Yeah,
We can talk tax treatment. We can talk capital gains. There's all kinds of different ways that real estate's better than the stock market, personally, in my opinion.
Another one you mentioned, financial advisors. I think this is really interesting because most of our clients, again, high net worth, they want to, diversify their portfolio. Boy, whenever I run into somebody with a financial advisor, they're the toughest case to demonstrate the value, because they've got a financial advisor. And I think I did a podcast, I don't know if it's come out yet on this, was their bias. I'm sorry. Their income is based on how much assets they have under management with you. How do you help individuals that, you probably have lots of doctor friends that have financial advisors? No, don't do that. Keep all your money in the stock market. How do you help them get over that hurdle that maybe you should take some of it out of there and put it in this? How do you handle that?
Yeah. That's like trying to convince someone's a wig maker that they need a haircut, right? And so it's like they want you to grow their hair. They have a vested interest in you keeping your money with them. They make money on what percentage of the money you have with them. So it's taking money out of their pocket to invest with you. And the interesting thing is that's not the way we get paid. And so, from the way we do business it's not directly related to how much money someone has invested with me. Whereas that's the way it is for the financial planner. So that right there tells you the system is set up for them to say no. Don't put your money over there. Keep it right here in my bucket. And that's why I get paid. And so, sometimes it's explaining that to them. People oftentimes don't realize that, or they don't really think of it in terms of, this is a person that they've met with several times. Typically, they probably given them some good advice about insurance and some things that make sense, like try not to roll my eyes. Can you hear my eye rolling on the podcast of dollar cost averaging and stuff like that, right? And so they're giving some good advice, and so there's some level of trust there. But then they don't realize, a lot of people don't realize that they have a vested interest in you not pulling your money out with them, even if it makes sense. They have I have this other product, and that's what they're doing. They're selling products, and so it's making people realize they're selling products that are fee laden, that don't have good tax treatment for you when you make money from them. You pay quite a bit of taxes on it, and they have a vested interest in you doing business with them and only them. And I think sometimes when you break it down like that, I've got a couple of different responses. One is, oh wow, I didn't know that, and they're a little bit more open to it. Other folks, especially doctors, because doctors, they don't like to be told they're wrong. If you're aware of that or not, we pretty much know everything, so we don't like to be told that we're wrong. So when you explain that, especially to my physician colleagues, they're almost in denial. Like they almost don't want to admit, like wow, this could be true. No, this and that, and this is my friend, and blah blah blah. I'm sure that's great that you're friends. My friend, in air quotations, when I pulled out multiple hundred thousands of dollars to invest in real estate in various different projects, that conversation I referred to where about the form to pull money out, that I have not had a phone call from him, not a single one, not ever, not since that day.
Wow.
That's not telling me. That was my friend, my quote unquote friend. Yeah, they're friends. And so you pull the money out, and then they don't have any use for you. And now, is everybody like that? No. But to me, that was like, if there was ever a way to cement that I made the right decision, I thought, I'm just going to wait and see if the guy calls. Hey, how's it going with the real estate stuff? Zero, nada, zilch. And that's been 2017, 16. Yeah. So that was very eye-opening, man. Very disappointing, quite honestly, but very eye-opening.
It's clearly a testimonial that, okay, if you're not doing something for them, they're not going to do anything for you. And that's
not
really,
everybody's like that.
Wow. No, but I've had very few people that have said they have a financial advisor. I mean, I can count on one hand those people that have converted. I probably talked to 30 people or something that have said, oh yeah, you know what? I do believe I should, because their financial advisor, they're going to go to the financial advisor and they're going to say, no, don't do that. Of course they're not. But I know, I was just interested to hear your perspective on that. It is a challenge.
Oh, no, it's
just
cool
service.
Story, yeah.
You feel bad for that person. Like, okay, you're about to retire and 100% of your money is in the stock market. The recovery of that could be disastrous for you. To take years to do so.
I'm always talking to my doctor friends in the hospital and things like that. And especially anesthesiologists, because I'm doing surgery and, believe it or not, like in the movies, there's a little chit chat going on, and I see them on a regular basis, for 2 or 3 hours at a time. And if I'm up to say, no, here's what I'm doing, and tomorrow I'm going to leave to go to Little Rock to see one of our properties, and I said, do you have any interest in being on my newsletter, just to learn about real estate?
Yeah.
He goes, no. Some time ago, my wife and I decided we're just going to invest only in the stock market, and I thought, OMG came to mind, like, oh my gosh, I almost wanted to say a prayer for that guy, like.
Yeah.
I hate to hear how it's going for him now. It was unfortunate, but you're right. Some people just have that idea, and I guess they want to ride the wave up and down and up and down and up and down. And if you want to play the dip, that's fine. You want to play, but I just choose not to live like that. I choose to make money while we're making differences in communities, because that's something we haven't talked about. Is you're providing good workforce housing in a place that needs it, in a place that was run down. So you're not just making money. You're not just wholesaling something, you're making money off of a transaction that doesn't really help anybody. You are providing good housing and making money in the process.
I love that too. Because typically when we take over properties, because we're doing value adds, there may be a little bit rundown. We're improving the living experience for the residents. And I think that's so important that you're doing this. You're coming and renovating, you're making a safer place usually. Well, always safer, put no more lighting in, put dog parks in. We actually add gates sometimes. But yeah, I do think that's a really good part of it. And there's a shortage of housing in the United States. So we are taking things that aren't that great to live in and making them nicer and allowing more people to have a positive living experience. So I think that's important too. That's good. That's good. Wow, you've just covered a lot of ground here today, Roderick. Now we're going to roll in. It is, and it's important. We're going to go into the lightning round. It's gonna be fun. People are gonna learn a little bit more about you. Are you ready?
Sure. Do I have a buzzer? Big bucks, no whammies?
No buzzer. There's not a time thing. It's not time, but there's 5 tough questions for you. The first one, what was your nickname as a child?
It really 2, Rocky or Rock. My sister couldn't say Roderick, and so she said Rocket. Well, that very quickly got changed to Rock. And in fact, my brother, when I call him, he goes, "Hey, Rock, what's up?" So it's Rock.
I love that.
And so I named my son. I didn't never want to have a junior, but I named my son Rocco. So I'm Big Rock, and he's what they call the capital of Arkansas. He's Little Rock. And so that's what my daughters say. Daddy's Big Rock, and Rocco's the capital of Arkansas. Little Rock.
Oh, I love that. That's great. That's great. Number 2, a morning person or night owl?
Night owl for sure. Like the undead. Like I'm walking with the zombies. I mean, I can stay up till 3 or 4 in the morning. Sometimes just getting work done. Or sometimes I'll fall asleep with my computer on my lap for 2 hours and wake up at 3 o'clock in the morning and then get another hour worth of work done and then go to bed. It's not great. It's really erratic sleeping habits, but I work better. I mean, I probably do. I mean, when I get up and I'm well rested, I do a lot of good work in the morning, but I'm a night owl. There's no question.
Yeah. Kindred spirits, same thing there. I love that. We're a separate breed. There's only like 30% of the population that are, so we're the minority. And the world is not centered around us. We know that.
Well, medicine makes you a morning person because surgery starts at 7. You have to get up at 5:30 or 6. And as a resident, I was getting up at 4:35 every morning, and so it changed my personality to some degree. But now that I'm back and doing my own thing and not on someone else's schedule, I've gravitated slowly to be more of a night owl.
Good. You can force your schedule to accommodate you instead of you.
That's right.
Accommodating the world. Number 3. What's the first thing you do if you won the lottery?
The first thing I do win the lottery. Well, this isn't very exciting, but I'm now a cash flow passive investor at heart. Is I would find investments that can create cash flow so that I never had to touch the principal. I know it's not exciting, but before I ever decided who I was going to give the money to, I'd create a scenario where I could live off of the investment interest and never touch the principal because I'll be there for my heirs. And then I would decide, okay, now I have this cash flow machine. Who am I going to give it to? What projects am I going to support? Which relatives am I going to support? But first, I would use that to create a cash flowing machine.
Legacy wealth. You were doing legacy wealth for the family. That's so great. Number 4, if you could live anywhere in the world, where would it be?
Wow, that's a tough one. That's a tough one because I have a 5, 10, and 12-year-old, and we live in this little suburb of Dallas-Fort Worth. and it's like the bubble of all bubbles. Like my kids ride their bike to school. We
Oh.
within a 3 block area, we hang out with like 10 or 15 couples. Like literally, you can have drinks and literally walk a block and a half home. Like we have to get in our car. We have to get in our car to go there. Oh, so it's. I might fix this house up and live in this house till my kids graduate high school because it's just too great for it. You know, it's not like it's a huge house; it's a nice house, but it's the experiences what I want my kids to have right now. I know that's you notice my answers don't often revolve around me because I've got a lot of people I'm taking care of and I think about. But if I live anywhere in the world, I mean, I really like Turks and Caicos. I'm telling you, that's a beautiful beaches, a great place to be. I could live on that beach for a long time.
Been there several times. I love it. Love it. You're such a grounded person. Your answers are so grounded. I love that about you.
I'm a dad. I'm on an HOA board. I've volunteered for this board and that board, and I'm interested in my community right now. That's where I am in my life right now. You know, I'm not really thinking about retirement. I'm in the production years and the grinding years, if you will. But it's not a grind when you know what you do.
Exactly. You have to.
Yeah.
Oh, number 5 then, the last question. What's one piece of advice you would give to new investors to help them get better returns?
Well, we talked about knowing the people, getting to know people. Well, as a lifelong procrastinator and as a surgeon who can complicate pretty much anything, like by analysis by paralysis, I would say currently, if your return is 0 because you're not invested, I would say take action because your ROI will be better than 0. It'll be better than what you're doing now, whether it's 8% or 15% or 25% or 35%. It's better than the 0 you're getting right now.
Yep. Very good. Mic drop. Excellent, Roderick. Well, thanks so much for being on the show. Tell the listener where they can get a hold of you, where can they learn more about the great things you're doing and how you help people.
Well, you can go to the FBI Most Wanted pages. No, I'm just kidding. You can find me. Sorry, I can't turn it off. You can find me at, you can go to my website at Fortis Equity Group. That's FORTIS equitygroup.com. Or you can just email me at passiveincome@Fortis Equity Group and connect with me. And I'd love to schedule a call and see what I do is I just get to know what their goals are and what they do like and don't like and where they are in their stage of life and see if there's something that we have that we'll meet with that's a good fit for them.
Outstanding. Thanks so much. And that will be in the show notes. You guys, if you didn't get that, you can always contact them through that. Thanks so much for being on the show.
Thanks for having me, Matt. It's always fun to hang out with you.
All righty. Take care.
Yes, sir. Thank you.
And that's a wrap. Thank you for listening to Better Returns, brought to you by Hanson Holdings. If you enjoyed this episode, please leave a 5-star review because it helps others discover this valuable content. If you would like to earn truly hands-off passive income, go to hansonholdings.com, where we help you invest in large apartment complexes to grow your family's wealth. See you next week with another awesome episode. Have a great day.